and welcome back to Buy Now, Sell Now. Time to get started on all our viewer queries, the stock-specific queries. And to do that, we have Sharmila Joshi who's joining us once again on the show, but we now also have Osho Krishan joining us on the technicals. Good morning to both of you. And Sharmila, I'm going to come to you with our first query. This is coming in from our viewer Rohan from Bengaluru, and he says he's purchased 10,000 shares of IDBI Bank at 99 rupees for the long term. He's asking if he can add another 10,000 shares at the current market price. What's your view on this stock?
Well, valuation-wise, it looks okay, but very honestly, this is not my best play or suggestion in the banking sector. There has, of course, been this developing story in this that at some point they will find a buyer, etc. But that said, given the fact that we have seen a correction in banking as a space, financials as a space, I would say, over the last 3 or 4 months, I would really recommend switching and buying something else altogether. I think that even if you were to look at ICICI Bank or even some of the smaller banks at this point in time, rather than, or even like in the PSU space, if you were to look at a PNB at this price, I think it will give you better returns than staying invested in IDBI. So that would be my recommendation.
All right, this next query that I have is coming in from Gauri, and she wants to invest a sizable amount of money in the markets today. At least 3 stocks is what she's looking to buy for the period of about 1 year or so. And the 3 stocks that she's looking at is ABB India, MCX, as well as Dixon Tech. Apart from that, if you can think of any other mid-cap which she can look at right now, what's your take? Very good morning.
Very good morning to all of you. Well, looking at the perspective that this is the perfect timing for anyone to start investing in equity markets, and the counter that she has already listed for her investment. So I'm expecting that majority of the counter have seen a decent correction. Firstly, for ABB, then we have seen a decent correction from the zone of 9,000 towards now 5,200 odd levels. But on the technical front, there is a possibility of further correction towards the zone of 5,000 zone. So I would say that one can again start investing in this counter, but it should be in a staggered manner. One should not put all the capital at a single go, because the market are pretty uncertain at current level. So I would be advising to accumulate in a staggered manner. ABB is a very good choice, and I am expecting that in the long run, yes, it has a potential to give a very strong movement also. So around the zone of 5,000 will be the apt zone to accumulate this counter. And can you please again suggest me the next 2 names which she has mentioned?
She had mentioned MCX as well as Dixon Tech, apart from ABB India.
Yes, for MCX, this counter have been into a time-wise corrective phase, not have seen much of correction on the price-wise chart. So here onwards, the possibility of a time-wise corrective phase or a further consolidation in counter can be seen. So one should not be in a hurry to accumulate MCX at current levels. Yes, some kind of proportion can be accumulated. For example, 20% of the capital can be invested in MCX also, but wait for further correction or either a decent period of consolidation in this counter as well. And for Dixon has seen a very a decent correction, but has not been into a very steep correction of profit booking because it is still hovering above 50% retracement zone. So I'm expecting that this is again not a very strong counter to accumulate freshly with the capitals, but with the long-term view, one can definitely again start investing in a accumulated manner, in a staggered manner. And apart from these, there are various counters which are looking very positive to me. Firstly, from the large cap will be Reliance, ONGC, GAIL. These counters can be seen to accumulate. From mid cap, some of the IT names can also be seen, which have seen a decent correction and has a possibility of reviving from here onwards. So one can start accumulating in a staggered manner in mid cap IT names also.
Okay, Osho, thanks for that very detailed view coming in. Gauri, I hope that answers all your questions about what to do with your 3 names, ABB, Dixon, as well as MCX, and the others that Osho has also recommended. But moving on from that, Sharmila, coming back to you, next query coming in from our viewer Mohit from Ludhiana, who currently holds 1,000 shares of SBI at a buy price of 184 rupees per share. So it's a significant profit that he has accumulated over the years. His time horizon is a further target for 2 years from now. What would you guide him to do? Would now be a good time to book his profits, or can he continue to hold for the next 2 years?
Well, he's sitting on considerable profit, so whether to book or not is really his call to take. I'll let you only just talk about what I expect from SBI going forward. Very honestly, I think, these kind of questions are very difficult to answer because, as for a stock like SBI, because at the end of the day, it is your largest bank, and the kind of market share it has domestically, from that sense, it's your largest bank. And if you're positive on the sector, there is no reason for you to not be positive on SBI. So it's almost like a given that if you like banking as a sector, you should like SBI. What I'm trying to say is that these stocks need to be part of your core portfolio, which you're not going to look at changing unless your view on the country changes. So from that perspective, for me, it's a clear hold.
All right, so that's the take coming in on the banks. Let me take the next query then. And the next query that I have, there are a couple of them actually pouring in together. This next query that I have is coming in from Gopal Subramaniam, and he wants a view on Jio Financials. What's your take on this one, Sharmila? Because I'm not sure whether he's already invested in the counter or he's looking to invest in it. Nonetheless, what's your take? If you are invested in it, should one stay put with Jio Financial? Because this one has done nothing actually. Even though there were hopes that, certain news flows will get cleared up, the stock will actually go higher. But that's not the way how it's transpired. Over the last 3 months, at least a sharp downfall, about 25% or so for Jio Financial. So what's your take? If you're invested, stay put with it, keep the faith. Or if you are looking afresh, now is the right level.
So, first of all, I think this entire sector has not really done well in this last 3 or 4 months, because you are sensing that slowdown overall in almost across the sort of, the different business models that you would have. You are sort of seeing where the margins will come from, who will the loans go to, etc. And I completely agree with you in Jio Financial, in the sense it is work in progress. So you heard a lot of announcements that were made that they would get into this business or that business, etc. But now you really need to see them deliver on the businesses that they said that they would get into. So I think you really need to keep the faith and just wait. And because the businesses that they did announce were pretty exciting, so you need to see if they really carry through on it. And I don't think that I doubt somebody like a Jio Financials in their ability to actually deliver on the businesses that they have entered, but you need to give that time. And now we are in a sort of a market where you are not really, you don't have that patience to allow people to deliver on what they have said. And in fact, you're punishing if anything is less than what you had anticipated. So that's the tricky part. But overall, my guess would be to really keep the faith and stay invested.
Okay, that's the take coming in on Jio Financial Services. Osho, coming to you now. Our viewer Gautam is writing to us from West Bengal, and he's asking for a view on Tata Elxsi. He's asking if this 6,000 level, the whereabouts where the stock is right now, would that be a good price to buy into this stock right now? What's your view on Tata Elxsi?
See, overall, Tata Elxsi has seen a decent correction, and there has been no pullback or respite in the journey of Tata Elxsi in the past few trading months. But overall, if we have to draw the broader time frame, then on the technical front, I'm having a strong support. This counter is having a strong support around the zone of 5,700, 5,750 kind of a zone, which is on a weekly and monthly time frame. So that is a zone where we can expect some kind of halt in the selling pressure in this counter. And from there onwards, if things happen positively, then there can be a decent movement that can be seen in this counter. So overall, on a broader time frame, 57, 5,800 is the zone where one should try to accumulate this counter. On immediate basis, the resistance is placed around the zone of 7,000. So that is the zone where one should try to either lighten up their position or wait for a breakout above 7,000, because after 7,000, we can see a bullish reversal in this counter returning back, and then we can see a broader price actions also.
All right, so that's the take coming in on Tata Elxsi. But on that note, we slip into a break on this edition of Buy Now Sell Now, because when we come back, we'll continue taking all of the stock-related queries with our experts, Osho, Krishan and Sharmila Joshi. So don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now. We're coming live to you from ET Now Motilal Oswal studio. Let's continue taking your queries to our experts. We have Osho Krishan on the technicals, while on the fundamentals we have Sharmila Joshi. And let me take this next query that's coming in from our viewer, that is Sampath Balaji. He's writing to us from Chennai. He wants to know about IndusInd Bank, 100 shares at a price of about 500 rupees per share. He's a long-term investor, and he is given a very tough question or a tough choice for you, Sharmila. Should he stay put with IndusInd Bank or look to switch to Axis Bank instead?
I think look to switch. While I do think that IndusInd Bank is at very reasonable levels. So overall, if you ask me, the financials of Axis Bank have impressed me more over this last year. So given the fact that both have corrected, I think I would say switch to Axis Bank. It would be my preferred stock.
Okay, switch to Axis Bank is the call coming in from Sharmila. Osho, coming to you. Next query is coming in from our viewer Nikhil Sharma, who's writing to us from Mumbai. He's saying he's an intraday trader and a short and long-term trader as well. He has sold shares of ITC hotels to book losses. He's asking when would be a right time to look at them again, to buy them again, or should he completely avoid them for the time being?
See, firstly, from the technical point of view, the technical data is not very much suffice to give a view on ITC hotels. But as of now, looking at the other hotel stocks, they are really performing very well. So even I have a very strong feeling on Indian hotels that this count is looking very positive. So for ITC hotels, I do not have any view as of now as per the data, but Indian hotels is looking very positive to me, and I'm expecting that in the coming period, it has a potential to test a higher zone, so one should definitely invest in hotel counters as of.
All right, so that's a take on ITC hotels. Let me take this next query that I have that is coming in from our viewer. Rohit wants to know about, okay, not Rohit. Let me take this one on ITC itself, because you did talk about ITC hotels. Let me actually get your view also, Sharmila, on ITC hotels. And apart from ITC hotels, I have a viewer who's written to us from Kolkata, Ignatius. He wants to know about ITC. 260 is a buy price, 240 shares can hold for the next 3 years. He's asking if anything will change with regards to what exactly is in talks about GST and the hike in GST rates for these cigarette and tobacco companies. How should one gauge if something like that has to happen, and irrespective of that, stay invested for the next 3 years in ITC?
I'm also invested in ITC, and I really think that no budget to my mind and no period in time have ever been positive on cigarette consumption. So there is always this sort of a thing that some tax will be increased. Some, it's if you look at it historically, cigarettes have just been made more and more expensive over a period of time. Having said that, the number of people who smoke hasn't really gone down, and they continue to report good numbers. So I think from that perspective, while I do think overall cigarettes as a business, if you look at it globally, is dated, I think in the Indian context, I don't really see any concern for ITC, and you bought it at a good level. So I would really recommend a hold, but you have to keep this in mind that over a period of time, there will always be news that some taxes being increased, or prices are going up for some or the other reason, because this is not considered to be like a healthy sector, and it's always an easy target when you want to sort of increase taxes. Coming to ITC hotels, I'm extremely positive because I like the kind of properties that they have, and it is a little unfortunate for them that this sort of demerger happened when market conditions were not so conducive. But overall, I think just given the fact that, as Osho was also referring, I think that I'm very positive on hotels as a business, given, everything that we're seeing around us in terms of, the number of people traveling, etc., etc. So just looking at that and looking at the properties ITC hotels as, I'm quite positive. So I would recommend to hold on both.
Call on ITC and ITC hotels both. Thanks, Sharmila, for that view coming in. Osho, coming to you for the next query, we have our viewer Gautam, who's writing to us from Mumbai, and the stock in question is Natco Pharma. He's asking if this company is a good buy at the current price from a technical perspective for the next 12 to 18 months. The price has fallen significantly in the recent past, so he's asking if this correction is a good time to make a fresh entry into Natco Pharma.
See, as per technical analysis, one should not try to catch any falling knife. So looking at the recent movement in this counter, there has been a steep correction from the zone of 1300 and is now hovering towards the zone of 800. The technical parameters no doubt have came to the oversold territory, but looking at the broader time frame, this counter have started moving on a positive note after testing the zone of lows of nearly 730, 720 odd levels. So one should wait if there will be any kind of consolidation in this counter around the zone of 750, 730, then that will be a time where one should start investing in a staggered manner, not very aggressively. And if there will be any kind of reversal on the technical front, as of now, it is into oversold, but there is no sign of reversal in this counter as of now. So if there will be any movement on the positive side in this counter, one can definitely start accumulating from a short or even for medium term time frame.
All right, so that's the take coming in on Natco Pharma. All of us in the newsroom or studios were pretty astonished given the fact that the pace of fall on this particular counter in the last 7 days, 37% or 35% in excess of that in the last 7 days itself. And the chunk of that sort of a fall has happened in the last 3 months, is in the last 7 days, looks like it for this particular counter. And the news flow also has not been supportive for Natco Pharma. Let's talk about IRCTC then. This one is coming from Raju from Bangalore. He has 100 shares at a price of 723 rupees per share. He wants to know whether he should exit, purchase more to average it and keep it for the long term. What's your take on IRCTC? Sharmila, what's your take?
Well, it's positive, and the stock has fallen quite a bit. And I think, if you were to again just extend the logic that I use for hotels, that overall I see travel as a component really rising. Finding a bigger sort of a portion of your spend going ahead. And I do think that everything that we have seen in the budget, one of the beneficiaries of that is going to be travel, because you are seeing that trend, especially in urban, the metro cities, that almost every weekend, every holiday, people do travel. And IRCT does have, their monopolies on railway tickets, the food in railways, water, etc. So this would be a stock that I would be positive on. And if you are a long-term investor, I would recommend a hold.
Okay, whole call coming in from Sharmila. Osho, coming to you. Next query is coming in on two banks. Mr. Kevan Swami is writing to us. He holds 2,000 shares of Bank of India at a buy price of 126 rupees and holds 1,000 shares of Karnataka Bank at 205 rupees per share. So two stocks, Bank of India and Karnataka Bank. What's the view on the charts going ahead?
Firstly, for Bank of India, this counter has been into a kind of a corrective phase, and there has been a formation of lower lows, lower highs kind of a formation. But from a broader time frame, there is a possibility for this counter to have a reversal once it breaches the zone of 100 exponential moving average, which is approximately around the zone of 108, 109 kind of a zone. So from there onwards, we can see some kind of movement, positive movement in this counter. For now, there is a range bound movement that can be expected on the lower end. 95 is a very strong support. On the higher end, 105 to 108 is a zone where it is facing a strong resistance. So once we witness a strong breakout, there is a possibility of a strong movement from a longer term duration. And now coming to Karnataka Bank, this counter has been into a steep correction with no sign of respite and currently hovering below the short term moving averages. So one should stay sideways from this counter. If one has already taken position, then my advice will be to hold it with a strict stop loss of 160, because if it breaches the zone of 160, there is a potential of other 20 points of correction in this counter. So hold with 160 as a stop loss. And on the higher end, we can see positive momentum only above the zone of 195.
All right, let me take a query coming in from Sagar. He wants a combo view coming in on Abbott India. He's holding about 24,500 shares of this counter since the levels of around 1,260 odd levels. He's a long-term investor in the sense that he's holding this for the last 10 years or so. He wants to know, on the technical front, do you foresee Osho in the short to medium term? What sort of levels do you see for Abbott India? He's already booked some partial profits in this particular counter. So he wants to know what should he do. And on the fundamental side, Sharmila, he wants to know, despite the fact that the stock has performed well, do you think that there is any other MNC stocks in the similar space or any other cheap stocks that he can look at now, sort of investing, given the valuation is good and the growth perspective is good? Osho, you go first.
Firstly, many congratulations to the person who has taken position at such a lower levels, and currently the stock is hovering around the zone of 30,000. But in the shorter term duration, the counter has seen, firstly, it has been an outperformer. But in the shorter term duration, in the last 1 hour of time frame, it is facing a very strong resistance around the zone of 30,000, 30,500. So this has been a very strong resistance. If there will be a further breakout above the zone of 30,500 on a decisive manner, then we can see a continuation on the higher end. But on the lower side, obviously, this counter is above all the exponential moving average. So there is no any caution signal that is being seen in this counter. So one can definitely stay hold from a short or medium term perspective. I'm saying that the time it breaches the zone of 30,500, we can see another set of rally in this counter. for now, if he is already holding, so my suggestion will be to keep a stop loss around the zone of 27,000 if required. Else, one can hold for a short to medium term time.
What's your take, Sharmila, when you talk about the fundamentals, given the fact that, it is human tendency to be very greedy and want more always from what you have, though Sagar has got a spectacular outperformance in this particular counter, he's still not content and happy, looks like it. He's asking if there is any other MNC counter which he can look at actually investing right now on cheap valuations and which will have better growth prospects. What's your view? Do you think Abbott is the best one, or there are other great MNCs that he can look at right now?
I don't think this is really a question of the investor being greedy, but I think more worried because when you are sitting on this kind of a profit, you really wonder whether you should just book your profit and look elsewhere, and the run is done in the stock. But the problem I have with answering this question is that even if you were, it's very difficult at this stage to look at any other. See, the entire MNC pharma basket also is trading at a certain valuation, and that valuation has happened in those stocks over a period of time. Perhaps the stock that has done best in this near term may have been Abbott, but others have also given fairly decent returns. So therefore, then to suggest that you jump into something else, and if that doesn't give you the kind of returns Abbott has given you, you will always be disappointed. So I think it just makes sense to stay put with what you have. This is a good company that's doing well. What you need to keep in mind is that MNC Pharma will sort of be in fashion for a while, will go out of fashion for a while. Currently, they're back in fashion because you're seeing the export-facing pharma companies facing a bit of headwinds, given everything that we're hearing about tariffs, etc. So now everybody's sort of brought their focus back onto MNC pharmas, which are more India-focused. So, that is something that, that cycle will keep happening. But if you look at the way Abbott has performed, the results that they have given, the presence they have in the Indian market, I don't really see any worry. And you have bought at an excellent price. I think just stay put, you've done a great thing by booking part profit, but I think just stay put with what you have.
Okay, Sharmila, thanks for that fundamental view on Abbott India as well. But Sharmila, coming back to you once again, we have a viewer Venkat Raman writing to us from Bangalore. Stock in question is BPCL. He's holding 320 shares at a buy price of 410 rupees per share and is now facing some losses. He's asking what to do now, completely exit this holding or continue to hold. His whole period is 12 to 14 months. What's the view on this one?
I think maybe you can take a technical view because very honestly, fundamentally, this is oil marketing, oil exploration, whatever is not a sector that I like because, I think that you are so, you're in such a sensitive sector that though now pricing is supposed to be sort of free, you do increase taxes when prices globally are low and, et cetera, et cetera. So I just feel that there are many more stocks out there to look at than this sector. So for me, really, this sector has been an avoid.
All right, then that's the take coming in on BPCL. No doubt it is a sector that and also in a space which is very heavily dependent on what happens globally when you take the crude oil prices. But Osho, I would love to take your comment on this one. But since we have paucity of time and it is a commercial commitment, so I'll slip into a break on this edition. But thank you so much, Sharmila, as well as Osho, for joining us on the show and taking all of the viewer-related queries. And for now, we are slipping into a break on this edition of Buy Now, Sell Now. When we come back, we'll have a big market voice telling you about big themes that you can actually look at in this coming year. Don't go anywhere.